What's up, everybody? Welcome back to my channel. Hope you guys are having a great day. If it's your first time here, welcome. It is great to have you. So I'm currently reading a book. It's called What Would the Rockefellers Do? How the Wealthy Get and Stay That Way, and How You Can Too. I'm a life insurance agent, and this book talks about cash flow insurance, whole life policies, and why they are a benefit in regards to your legacy, in regards to leaving your loved ones financially stable when you are no longer here. Life insurance is a tough conversation for a lot of people because it basically is talking about when you're no longer here, right? So in my situation, I want to make sure my loved ones are taken care of when I'm no longer here, because I want to say our duty, right? As individuals that have a family, that have loved ones, and we can do the stock market, we can put money in a bank, we can do all this other stuff. But in this book, he's basically talking about why cash flow insurance, whole life policies are the way to go when it comes to saving money, putting money away, and as well as having money, a large sum of money for your loved ones when you pass, because the death benefit is also an important part of having a policy, a whole life policy. So chapter 6 is where we're at. It's called Why Whole Life Insurance Beats the Alternatives. I feel like a lot of these chapters, the first few, are kind of very similar, where he's basically talking about why whole life policies and why not like the stocks and savings and CDs and that kind of stuff. And really it just comes down to return on investment, right? It comes down to the tax situation when you want to take money out. If you're in a bank and you have a bank account, obviously, I'm not going to tell you not to have that. It's important to have that because it's important to have your money in a place where you can pay your bills and do all that stuff. But when it comes to really saving money and putting money away, banks don't give you a lot of interest. CDs, not so much. Savings accounts, stocks are very, 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 very risky. You have to know what you're doing if you're going to be in stocks. So whole life insurance policies, essentially when you make your payments every month to the policy, the amount of money you put into it every month will grow in value. So it's called cash surrender value, which is the money available to you if you want to take it, right? So if you get a policy, let's say 20 years down the line, you want to take $15,000 of that money. What's great about having a cash flow insurance policy, in respect to having a bank account or an account with a bank, if you ask for the money from a bank, they're going to go through all this stuff. What's your credit score? How much do you make a year? They're going to have high interest rates. They're going to want their money back every single month without fail. You've got to pay them back, or you're going to go into debt, and you're going to go into, non-payment, and, that's not a good thing, right? Drops your credit and all that stuff. Whole life policies, it's your money, right? You take it out if you need it. It is not taxed, and you pay it back how you want to pay it back. Now, we always recommend to pay it back, but because it's your money and it's your money that's accumulated, it's your money. It's not taxed. You take it and you use it, and then you pay it back. You should pay it back, especially if you take it out early in life. You want to continue to build that value later on in life. But again, it is your money, right? And the great thing about these policies is they also carry a death benefit. So you can have a policy that pays out $500,000 to your beneficiary when you pass away as well. So it's a dual policy. It gives you liquidity, which is important when it comes to how you invest your money, right? The money is there. You can take it, right? Just request it. It's yours, right? And it builds throughout the years. And if you were to pass away 10, 15, 20 years down the line, your beneficiary will also get whatever the cash, whatever the death benefit is for that policy. So, we can talk about life insurance till we're blue in the face. There's other options like term policies and other things, which are affordable if that's where you are financially. I just recommend having some sort of policy. That's the way I speak to my friends, family, customers, clients. Have something, right? Something for at least when you pass away, that your loved ones are not struggling. They're not trying to do GoFundMe's. They're not trying to find a way to bury you, for lack of a better term. And having money for rainy day, for mortgage bills, for all that stuff, because that stuff doesn't go away. If you're living with somebody under the roof of your house, and you're both reliant on each other for bills, and one of them passes away, what happens, right? Those don't go away. They got to be paid. So whole life policies is the way to go. If you don't have one, let's talk. We can get you one. But just a great policy to have. And you should have one for your children and your family and your spouses, and everyone should have one, because it is a great way to build cash value and build a legacy for your family and take care of your family in the event of your passing. So that's chapter 6. Again, just kind of a lot of these chapters so far, we've just been talking about the benefits of cash flow insurance. I'm sure that we'll get more in depth on how to figure out the best one for you, and we'll get there soon. But that's chapter 6. Hope you guys enjoyed. And again, if you are looking for a policy, if you're looking for something, please comment, reach out, and we'll get you the best policy for you and your needs. All right. Have a great rest of your day, and I will talk to y'all soon. Take care.